everyone, and welcome back. We're doing a deep dive today. We'll be looking at venture capital and its connection to innovation. And guiding us through all this is Bernard Guilhon's book, Venture Capital and the Financing of Innovation. It's packed with real-world examples. So it should be a really interesting look at how this whole system works. And of course, to help us break it all down is our expert who can connect all the dots, tell us the why behind the what when it comes to venture capital. One of the things that really surprised me reading this book was just how much more there is to VC than just, picking winners. Guilhon, he dives into this whole ecosystem, right? Government, culture, even psychology, it all kind of plays a part. And he really highlights how different countries, they have wildly different VC landscapes.
Yeah, absolutely. And I think his comparison of the U.S. and Europe really brings this to light, right? The U.S. system, it's almost like this Darwinian selection process, I guess you could say. Very deregulated, super competitive, creates an environment where really only the absolute most promising, most innovative companies are going to rise to the top and secure funding. Europe, on the other hand, has traditionally been much more bank-centric, I guess, with tighter regulations and, a much greater focus on long-term stability, I'd say.
It's interesting. He keeps mentioning this institutional architecture. Could you unpack that a bit for us? How did that factor into these different approaches?
Yeah, for sure. So institutional architecture, at least in this context, it refers to how formal institutions, things like government policies, legal frameworks, regulations, that sort of thing, how those interact with kind of the more informal institutions, cultural norms, social networks, even attitudes towards risk and innovation. And together, these create a really powerful feedback loop that can either, supercharge innovation or really hold it back. Yeah, so in the U.S., you see the system that really encourages risk-taking. It rewards success and honestly, sometimes even failure to a certain extent. And it really fosters this entrepreneurial, spirit from the ground up, And this makes it really fertile ground for venture capital to, flourish. Europe, it has its strengths for sure, but it often grapples with bureaucracy, lower tolerance for failure, and sometimes a preference for tradition over disruption. And this can make it a lot harder for truly radical ideas to get the funding they need to take off, even with government support.
So does that mean Europe is destined to always be playing catch up in this innovation game? Is the U.S. model inherently better? Or is there maybe a different path emerging?
Yeah, that's where things get really interesting. Because while the U.S. definitely has a really strong track record, it's not as simple as saying one model is inherently better than the other. Europe, despite the challenges, they are cultivating their own, I guess you could say, unique brand of venture capital, often with a focus on things like, deep tech, sustainability, and social impact. And honestly, we can't forget that every model has its own pros and cons. The U.S. system, with its big emphasis on quick returns, it sometimes misses out on these groundbreaking innovations that require a much longer runway. So it's more nuanced than just one being a clear winner. It's about, really understanding the strengths and weaknesses of each approach.
It's like comparing apples and oranges. They're both fruit, but they offer totally different flavors, right? And I think what's important is really understanding those differences and how they kind of shape the landscape of innovation in each region. And this kind of leads us to another key takeaway from Guilhon. One thing Guilhon really emphasizes is just how crucial high-tech industries are, not just for attracting venture capital, but for driving economic growth overall, And he argues that its impact goes way beyond just those specific industries. Yeah. It's creating this ripple effect of innovation across other sectors too.
Yeah, exactly. And he uses Tesla as a prime example in the book, and it's a good one. It really illustrates how high tech is basically blurring the lines between all these traditional industries. You know what I mean?
Right. What is Tesla even? Are they a car company? A tech company,
yeah,
an energy company. It's kind of all of them rolled into one,
Exactly. And this kind of cross-pollination of ideas and expertise, it's becoming more and more common, honestly. And it's one of the main reasons why high tech is just so vital for economic growth. It's not even just about the technology itself, but it's about how it sparks innovation in all these other areas. Think about smartphones, right? Revolutionized communication, obviously, but then they completely transformed banking, healthcare, just countless other aspects of our lives, really.
And speaking of Tesla, I thought it was so interesting how Guilhon points out that even these massive companies,
right,
these companies that seem like they could do it all, they still rely on this huge network of specialized knowledge, right? He calls it cognitive modularity, which is a mouthful.
Yeah. It's a fascinating concept, really. Basically, it means that even a company as like resourceful and ambitious as Tesla, they can't be experts in absolutely everything, right? They still rely on this whole network of suppliers, researchers, specialized firms to provide like the really deep knowledge and skills they need to actually bring those innovations to life.
So it's like even Tesla, as big as they are, they still need a team. Nobody knows everything. It really highlights how interconnected this whole world of innovation really is.
Absolutely. It's a good reminder that innovation is rarely like a solo thing. It's all about collaboration. It's about sharing knowledge. It's about being able to leverage expertise from like all these different sources.
And that brings it back to you, right, the listener. Because whether you work at a company like Tesla or you're supplying parts to them, or heck, even if you just use their products, you are part of this like intricate system of innovation. And I think understanding how it all works, how that knowledge flows, how innovation emerges, it gives you a whole new perspective on your own role in the economy, honestly. Now, we've been talking big picture so far, right? The systems, the structures, all the things that kind of shape the world of venture capital. But I kind of want to shift gears a bit and talk about like the human element of this whole thing. You know, the actual entrepreneurs who are out there seeking this funding. Guilhon, he points out some of the challenges and motivations for these individuals. And it's honestly, it's not always as straightforward as just, chasing a big payday.
Oh, absolutely. He talks about factors like, risk tolerance. And then you've got cultural norms, even like the dynamics of the labor market. It all plays a role in whether an entrepreneur decides to, go down the VC funding route.
For some people, it's like the allure of that rapid growth, that massive exit. It's just too strong to resist, even if it means giving up some control over their company, But for others, it's more about like bringing their vision to life on their own terms, even if it means, slower growth, maybe a less glamorous path.
And then you've got those cultural factors, like you were saying. Guilhon actually gives this example of family-owned businesses in some European countries that are actually less likely to like embrace VC funding, even if it could potentially help them grow, which is kind of wild, right?
Yeah, that really surprised me. I mean, if it could help your business grow, why wouldn't you?
It really comes down to those cultural values and priorities, In some cultures, maintaining that family control over a business, it's just paramount, even if it means like potentially giving up some growth potential.
So it's about more than just the money. It's about control. It's about legacy. It's about staying true to your values,
Exactly. And there's also this perception, in some circles at least, that VC funding comes with like strings attached.
Yeah.
Like lots of autonomy, a big focus on those short-term gains over the long-term vision, sometimes even like a clash of values between the entrepreneurs and the investors.
I always just assumed it was like a win-win for everyone involved. I never even really considered that there might be conflicts, honestly.
It certainly can be mutually beneficial for sure. But like any relationship, it's complicated, right?
Mm-hmm.
There are definitely some like inherent tensions there. The desire for growth versus the desire for control. Short-term profits versus that long-term vision. Even the entrepreneur's passion for what they created versus like the VC's focus on financial returns.
So being able to navigate those tensions successfully, that's what separates like the runaway success stories from the ventures that, maybe fizzle out.
Exactly. Requires clear communication, aligned goals, a shared understanding of like the journey ahead.
Okay, so given all of that, right, all those potential pitfalls,
Yeah.
the cultural differences, the fact that entrepreneurs and VCs don't always agree, it kind of makes you wonder, is today's VC-fueled growth really sustainable? Or what? Are we like heading for another dot-com bubble burst? Or are things different this time around?
Yeah, that's the big question, isn't it? Is this all just like a house of cards ready to collapse? Or is there something more, something actually solid underpinning this whole VC-fueled growth spurt we're seeing?
It's a huge question, and Guilhon actually argues that it's just like fundamentally different this time around. It's not the dot-com bubble all over again. We're not just talking about websites and e-commerce anymore, right?
Yeah.
The rise of what he calls superstar firms, these companies like Amazon, Google, Apple, that's really changed the game, honestly. Okay, so let's talk about these superstar firms a bit more then. How are they actually impacting the VC landscape? And is it ultimately like a good thing for innovation, or is it actually holding things back?
Well, On the one hand, they're creating some incredible opportunities for advancement, right? I mean, these companies have the resources, they've got the reach, they have just this like massive amount of data, so they're able to drive technological innovation at a scale we just never seen before.
Yeah, that's true.
I mean, they're pouring money into research and development, they're creating these entirely new markets, and they're just constantly like pushing the boundaries of what's even possible.
That all sounds pretty positive, honestly. So what's the downside?
Well, Guilhon does inject a bit of a cautionary note here. He argues that the sheer size and market dominance that these superstar firms have, it could actually end up stifling innovation in the long run, which is interesting.
Really? How so? You'd think all their resources and their reach would actually, like, speed up innovation.
To a point, yeah. But there's, like, a flip side to all of it. They tend to, consolidate their power. Like, they'll often just acquire a promising startup before they can even become a threat,
Oh, yeah, that's true.
And then they have this tendency to, like, hoard knowledge within their own little ecosystems, which makes it really difficult for smaller companies or startups to even compete,
So instead of having this, like, diverse and vibrant ecosystem of innovation, we risk ending up with a handful of these massive players who just call all the shots.
Exactly. And that's a real concern because it can lead to like a focus on much less risky, more incremental innovation. These big companies, they might start prioritizing, protecting what they already have instead of disrupting their own markets, which is really what drives those big groundbreaking changes.
That seems like the opposite of what venture capital is supposed to be all about. It's about fueling disruption, not preventing it.
Exactly. And that's the real dilemma I think we're facing right now. How do we take all this power that venture capital has and use it to drive real, meaningful innovation while still making sure there's a level playing field for those next generation disruptors,
Yeah.
How do we balance the need for growth with the need for a truly dynamic and diverse ecosystem of innovators?
It's a big question, and honestly, it's one that we all need to be thinking about. I think this deep dive into venture capital and innovation, it wasn't just about like understanding how it all works, but also about recognizing that we all have a role to play in this whole thing. Whether you're, an entrepreneur with some big idea or an investor who wants to make a real difference, or even if you just, use the cool new products and services that come out of all this innovation, we all have a stake in this conversation, So as we wrap things up, here's something I want you to think about. Given everything we talked about today, do you think these superstar firms, are they helping or hurting the next generation of innovators? What can we be doing to make sure there's a level playing field for that next great idea, the one that could change everything?
If you want to dive even deeper into all of this, and trust me, there's a lot more to explore here, Rate. I highly recommend checking out Bernard Guilhon's book, Venture Capital and the Financing of Innovation. It's a fascinating read. And as always, thanks for joining us for this deep dive. Until next time, keep seeking out knowledge, keep asking those tough questions, and never stop pushing the boundaries of what's possible.